Welcome to our daily Forex market analysis, and this is for trading on May the 8th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money, especially right now with the current market volatility the way it is. All right, as usual, we'll start off by taking a look at our calendar here. So in terms of our data, we did have quite an interesting day. We had Bank of England today, and then ECB. And coming up here shortly, we have Reserve Bank of Australia monetary policy statement. So we already know that Reserve Bank of Australia has decided to keep things as they were. So no big surprises expected there. Now, in terms of the data here, the unemployment claims here came in above expectations, so that this data here was negative. And we did see the Bank of England kept their monetary policy the same, so no changes made, but they did say that they may actually extend the QE program in June. So coming up on Friday here, we do have bank holiday in France as well as UK. Not all of Eurozone. We do have German trade balance numbers here. Now, we have seen that the Australian trade balance numbers were actually positive, and we did see we saw actually markets go up as a result of that. And another piece of news that came out yesterday after the market closed in the Asian session was also the Chinese numbers. The trade balance numbers were positive, and that gave the markets buoyancy as well. So we saw the markets go up, the stock markets, I should say, go up. And other than that, overall, we are seeing a risk on type of environment in the market. We had more earnings reports today from PayPal, and PayPal, again, positive numbers came out of PayPal. So far, we have seen a lot of the tech companies have been reporting positive numbers. So we saw Apple, then Google or Alphabet, PayPal, Amazon, all of these companies have reported positive earnings, which is good for the stock market. So actually, Nasdaq has now gone into the positive territory for 2020. So it's as if this whole crisis no longer exists as far as the market is concerned. We'll see how that plays out in the long run, but in the short run, we are back into the risk on environment with all these different things basically adding to the market, to the positive market expectation, especially the Chinese data. We saw that China was one of the first countries that was impacted by the virus, and now that China is reporting a positive trade balance number, it actually was better than the previous trade balance number. That basically tells the market that we may see a similar recovery in the other economies as well, with the different countries basically giving up some of the restrictions and opening up the economies. So now the equities markets or the stock market is looking for a positive economic outlook for all the different countries around the world. And as a result of that, we have very much a risk-on environment where everybody's willing to, or the investors are wanting to take risk, and they're positive in the stock market. And when that happens, we generally see our yen crosses drop, US dollar crosses drop, and this is yen crosses go up. My apologies. Yen crosses go up and US dollar crosses go up because yen drops and US dollar drops. Now, having said that, we do have employment numbers coming out tomorrow. We do have Canadian employment numbers here. Of course, we are expecting, a lot of people applying for unemployment here. So that's supposed to get worse. The unemployment here is supposed to get to 18%, which is substantial. So if the number is bigger than this number here in terms of the job losses as well as unemployment rate, we're likely to see a drop in Canadian dollar, which means the dollar CAD could reverse. However, at the same time, we also have the US dollar non-farm payroll numbers. And this one will likely be one of the worst non-farm payroll numbers in terms of the number of job losses. But also, this is likely to be one of the most interesting ones in the sense that we did have the unemployment numbers come out for the ADP. ADP unemployment numbers were expected at 20,500,000, so 20.5 million. However, they came in at 20,236,000. So it was slightly better than what was expected. And the stock market responded to that in a very positive manner. So here, right now, the expectation is for 22 million job losses. However, if the number is even slightly better, that can be positive for the stock markets. So we could see stock markets go up even further. So right now, the market is very, very volatile. I would suggest being very careful right now because things have reversed. Oh, and another thing that changed the sentiment in the markets was also there was an article, or there were comments that came out saying that US and China are going to hold a telephone call next week. So some of the risk off sentiment was getting created because US and China were fighting, or they were having this war of words with each other. US was blaming China for not taking care or not handling the virus situation properly initially and not letting other people know, trying to cover it up. US was also saying that China needs to basically make the purchases in line with the trade deal that was done prior to the pandemic. And China hasn't really been able to make all those purchases from the US. So, so there was back and forth between the two countries. But then yesterday, again, in the Asian session, there were some comments that came out saying that US and China are willing to talk, and that creates a positive sentiment again in the market. As well, we saw Australian trade balance numbers came in above expectations, a fair bit above expectations actually. So between Australian numbers that came in positive, Chinese numbers that came in positive, and then the whole argument between US and China dying down, all of that was considered positive or was taken in as positive by the equities markets, and we saw a jump in the equities. Essentially, since the Asian session yesterday, we saw everything reverse. Now, there was another thing that was floating, but it was, in my opinion, I think it was just they were just saying stuff. One of the things that was floated around was that US may default on their debt, especially to China. I don't think US will actually do that. One of the problems will be that if US defaults on their debt, so China holds a large amount of treasury bills that are sold by US. So if US doesn't make the loan payments, or they're supposed to pay interest on those T-bills. So if they don't make those payments and default and say that they're not going to because they don't have the money, that would be bad. And China is really likely to get really upset with that. And they could then go and sell all the T-bills, which would basically crash the bond market. And that will be very negative for the US, which will cause a crash in the US equities markets, as well as we're likely to see US dollar crash. And of course, it will create a risk-off environment, in which case all the markets across the world will drop including the Chinese market. So it's not a positive scenario for anybody at all. And that's why I don't believe that we would actually get there. So after that, we saw that a positive sentiment or positive news come out saying that they have scheduled a call between US and China, and market likes that, because that then basically everybody backs off, and if they're willing to negotiate and talk, that is always a positive development. So all in all, we have seen a positive risk on sentiment in the equities markets, which means we have also seen a risk on environment in the Forex markets. And having said that, let's take a look at our charts now. We'll start off with euro dollar here. So euro, we were looking for a drop here. It only went into 1.0765 level here. And then it reversed from there. A lot of that had to do with the equities markets. So now we do have a bullish candle close for the day. One thing to keep in mind here would be that price is into resistance. So we have to be careful with this one, because if it doesn't break through this resistance, we could see price turn around. So tomorrow here, going into the non-farm payroll, I am expecting the markets to be volatile. And also it's a Friday. Fridays can be reversal days. So overall, looking for a high level of volatility in the markets. So I would suggest being especially careful going into that type of an environment. This may be the best time to watch and learn, as opposed to really sort of putting our head on the line, as I would say, or putting our money on the line. So I would just suggest being careful. But having said that, we do have a bullish candle close. The caution will be the resistance level here. If it doesn't get through 1.0850, we are likely to see a reversal. Having said that, though, bias is bullish. We have a bullish candle close, and see how price had bounced off of this level. So looking for a further move to the upside. Again, there's a lot of resistance all over the place here. There's basically a block of resistance here. So I would keep an eye on that. First target would be 1.0850, second target 1.0885. Now, if the non-farm payroll numbers come in better than expected, we could see this take off even all the way into 1.0920. So I would suggest keeping an eye on things here. So bullish bias for euro dollar for now. Pound dollar here, this one has been neutral today. We did see price drop. This one actually was interesting because we did have Bank of England. Bank of England, essentially the move after Bank of England was positive. And then as markets sort of read into what Bank of England was saying, things did turn around, and pound dropped. But after that, with the risk on environment in the market, we did see British pound go back up. So the bias is neutral here. But if everything else goes up, so if we see that the risk on environment is alive and it continues on, we're likely to see this one go up as well. The first target here is 1.2420. And should it go through that level, next target here is 1.2480. So neutral bias here for pound dollar. Aussie dollar here, a very strong close for the day. Most of it had to do with the positive trade balance numbers that came out for Australia, as well as the risk-on environment that we are in. When we are in a risk-on environment, that means the investors are willing to take risk. That means the stock markets are going up. When we are in that type of an environment, Australian dollar goes up, as well as New Zealand dollar. So commodity currencies tend to go up when we are in a risk-on environment. And when that sentiment changes and we are in a risk-off environment, we see Australian dollar, New Zealand dollar, all of these commodity currencies drop. So right now, we see a bullish engulfing candle close here. So bias is bullish. Next target here for Aussie dollar would be well, we kind of right into that. 0.63, let's just go with 0.6350, and then 0.6550, 0.6570. So bullish bias here for Aussie dollar. New Zealand dollar, this one's looking bullish as well. We do have a bullish candle close for the day here. Prices made it through this next resistance level. And next target here is 0.6110 and then 0.6130. So bullish bias here for New Zealand dollar. Right now, everything is looking fairly bullish. So I would expect it to go higher there. And if the non-farm payroll numbers come in positive, this could go even higher all the way into 0.6180. So bias is bullish for New Zealand dollar. Dollar CAD here, this one, we saw that price went up a bit and then it turned around here. We have a bearish engulfing candle close. Just like the other commodity currencies, Australian dollar and New Zealand dollar, we have seen Canadian dollar strengthen as well. As a result, we have a strong bearish engulfing candle. As we can see, risk sentiment is really taking on, or risk on sentiment is really taking on here. And the market is just going gangbusters right now. So this is looking bearish. We are into support where prices right now, but the way the momentum looks right now, it's looking quite bearish. Next target here is 1.3920 and then 1.3850. So bias is bearish for dollar CAD. Gold here, gold looking quite strong. And now silver here. Silver looking very strong, prices right into the resistance. So do be mindful of this. But we have seen that both our gold and silver have been positively correlated to the stock markets at this point. So this is looking, well, we do have a bullish engulfing candle close. So this is looking bullish as well. And in terms of the targets here, we are looking at 15.80. So bullish bias here for silver. Gold here, gold looking very bullish as well. Nice bullish engulfing candle. It bounced off of the support level here. Next target is 1730. And then we're looking at 1738. So bullish bias here for gold as well. Oil here, oil actually dropped today, but because the equities markets have been so strong, that hasn't negatively impacted the Canadian dollar, and we have seen Canadian dollar strengthen regardless. But we do have a bearish pin bar here, so we could see price drop further. Next target here is 22.50. And then below that, we're looking at 20.80. So bearish bias here for oil. Copper here, copper looking super strong. It is heading towards resistance, so do watch out for that. Bias is bullish though. 2.35 is the first target, and should it get through that, we have 2.38 as the next target. So bullish bias here. It's been maintaining this support level here. If we take a look, it's been holding above that support level, and now looks like it could go higher. So bullish bias here for copper. Bitcoin here, Bitcoin is looking quite bullish. We have a big bullish engulfing candle close. So with Bitcoin, we have two different things working in its favor. One, the risk sentiment has turned to be a risk on now, which is good for Bitcoin, as well as the halving that's coming up for Bitcoin. That is pushing the price of Bitcoin higher as well. There were some rumors that it's likely to get to 12,000. We'll see. But for now, this is looking bullish. Next, we are already into the first target here. And beyond that, we are looking at 10,180. So bullish bias for Bitcoin. S&P 500. So let's take a look at our stock markets. As we can see here already in the Asian session here, the futures are going crazy, looking quite bullish here. In terms of our daily, we see that finally price has been able to break the resistance. It had been trading in this range for the last 3 days here. It did drop initially, then it has moved higher with the risk sentiment turning positive with the different countries announcing that they're going to open up their economies. Even though the number of virus cases are increasing steadily, but market has been bullish with different countries announcing that they're going to open up the economies, and that should be better for the business. And today we see that in the Asian session here, price has gone through the resistance level. So this is looking quite bullish at the moment. Next target is 2920. And then above that, we are looking at 2970. So bias is bullish for S&P 500. Nasdaq here, this one, as we can see here on the 1 hour chart, it has broken through the resistance level in the Asian session here. Our daily candle close is bullish, and as we can see, it's breaking out to the upside right now. So the bias is bullish here. Next target is 9220, and should it continue on, we are looking at 9270. So bias is bullish here for Nasdaq. Dow Jones here, this one is right into our resistance. We did have a bullish candle close for the day, and now it's trying to break to the upside here. Bias is bullish. Next target here is next target is 24,450, and then 24,800. So 24,450 and 24,800. So bias is bullish here for Dow Jones. DAX here, this one is bullish as well. From the daily, we can see price has closed right into the resistance, and with all the other markets going up, this is likely to go up as well. Next target is 10,900, and then above that 11,000. So bullish bias for DAX as well. Same thing here for FTSE. We see that price made a higher high and higher low, so this is looking bullish as well. Next target here is 5980, and then above that, so 5980 and 6050 will be the two next targets here. So bias is bullish for FTSE as well. And then we have Nikkei is already moving up. This is what causing everything to go up as well. This is looking strongly bullish on a 1 hour chart. As we can see on the daily, it broke through our resistance level here, closed on the other side, and now it's just shooting higher. So looking bullish here. Has already gone through the first target level here. Next target level is 20,180. So bias is bullish. And above that, we're looking at 20,480. So looking very strongly bullish for Nikkei as well. Now, we do see that the positive risk sentiment has the grip of the market. The only caution I would have here would be if the non-farm payroll numbers come out below expectation, especially if they are substantially, a lot of people got laid off, essentially. If the non-farm layoffs or unemployment numbers are much higher, we are likely to see a reversal in the markets, and that could come in fast and furious. Or we could see going into the New York Open, we could see markets turn around, anticipating that. But right now, that does not seem to be the case, but it is a scenario that we have to be mindful of with non-farm payroll being such a big or important report. So just keep that in mind. But other than that, that's it for now. Have a wonderful trading day, and I'll be back again in I'll be back again on Sunday. Bye for now.